Hello everyone, and welcome to Pie Uncut, your go-to source for investment insights. Today, we're diving into two stocks that Warren Buffett's Berkshire Hathaway has in its portfolio. And according to recent analysis, these are two no-brainer buys for 2025 and beyond. Let's get started. Warren Buffett and Berkshire Hathaway. First, let's talk about Warren Buffett. For those who might not know, Warren Buffett is one of the most successful investors of all time. He's the chairman and CEO of Berkshire Hathaway, a multinational conglomerate holding company. Under his leadership, Berkshire Hathaway has delivered incredible returns to its shareholders, with a cumulative return of over 5,500,000% over the last 60 years. That's not a typo. That's millions of percent. Buffett's investment philosophy is simple yet profound. Invest in great companies at fair prices. He looks for businesses with strong competitive advantages, consistent earnings, and the ability to generate cash flow over the long term. And that's exactly what we see in the two stocks we're discussing today, Amazon and Domino's Pizza. Stock 1. Amazon. Let's start with Amazon. NASDAQ AMZN. Amazon is a titan in the e-commerce and cloud computing space. Berkshire Hathaway has held an investment in Amazon since 2019, and as of the first quarter of 2025, they still hold 10 million shares, valued at approximately $1.9 billion out of Berkshire's $263 billion stock portfolio. Why Amazon? Ecosystem of services. Amazon has built an ecosystem that gives it a wide competitive moat. Its online retail store generates 37% of its revenue, but its non-retail services like Amazon Web Services, AWS, advertising, and Prime subscriptions make up 60% of revenue and deliver much higher margins. AWS, in particular, is a leader in cloud computing, driving significant growth. Prime membership. With over 130 million U.S. subscribers, Amazon's Prime membership locks customers into its ecosystem with benefits like free shipping and digital entertainment, including Prime Video, which has a massive ad-supported audience. Market dominance. Despite competition from Walmart and Costco, Amazon's share of the U.S. e-commerce market was about 6 times larger than its next closest competitor, Walmart, as of 2023, according to Statista. This dominance is supported by decades of investment in warehouse infrastructure for fast delivery. Valuation. As of May 21, 2025, Amazon stock is trading at $201.32 Amazon stock price. It's valued at just 19 times its trailing 12-month operating cash flow, which is at the low end of its historical trading range, suggesting it may be undervalued. Recent developments. Recent news indicates Amazon is investing heavily in areas like AI, with a reported $5 billion investment to build an AI zone in Saudi Arabia. This could further bolster its growth in high-margin sectors. However, investors should be aware of potential regulatory challenges, as large tech firms like Amazon face increasing scrutiny globally. Stock 2. Domino's Pizza. Moving on to Domino's Pizza, NASDAQ DPZ. Berkshire Hathaway recently added Domino's to its portfolio in the third quarter of 2024 and has continued to buy more shares in subsequent quarters. Why Domino's? Market leadership. Domino's is the leading pizza chain globally, with over 21,000 stores in more than 90 markets. Its efficient supply chain supports a healthy profit margin of 13%, and it generated $19 billion in global retail sales in 2024. Historical performance. The stock has delivered a total return of nearly 400% over the last 10 years, driven by 19% annualized growth in earnings per share. This resilience is notable, despite macroeconomic challenges, like inflation. Growth opportunities. Domino's captures less than 25% of pizzas sold in the U.S., leaving significant room for market share gains. Its international expansion and partnerships, such as with DoorDash, are expected to drive future growth. Valuation. As of May 21, 2025, Domino's stock is trading at $485.10, with a price-to-earnings P/E ratio of 28. Domino's stock price. While not cheap, this reflects its strong growth potential. Recent developments. In the first quarter of 2025, Domino's reported a surprise decline in U.S. same-store sales. Due to elevated inflation and economic uncertainty, Domino's Q1 2025 results. However, the company outperformed earnings expectations with $4.33 per share against an estimated $4.07, and international same-store sales grew by 3.7%, beating estimates. Domino's expects demand to rebound in the second half of 2025, supported by new menu items like Parmesan stuffed crust pizza and its DoorDash partnership. Risks to consider. While both stocks are compelling, there are risks to consider. Amazon. Regulatory pressures on large tech firms could impact its operations, particularly in international markets. Economic slowdowns may also affect consumer spending on e-commerce. Domino's. The recent U.S. sales dip highlights vulnerability to economic conditions like inflation or potential recessions. Geopolitical volatility could also affect international demand. Conclusion. In conclusion, both Amazon and Domino's Pizza align with Warren Buffett's investment philosophy of buying great companies at fair prices. Amazon's diverse revenue streams, dominant market position, and potentially undervalued stock make it a strong candidate for long-term investors. Domino's, with its leading position in the pizza industry and growth opportunities, remains attractive despite short-term challenges. As always, conduct your own research and consider your investment goals and risk tolerance before making any decisions. That's all for today's episode of Pie Uncut. Thank you for listening, and stay tuned for more investment insights.